All right, so if you are wondering what in the world is going on in the stock market, is there a way that it's going to stop? Is this the top or can it go further? You have come to the right place. You have found Riz. This is Chris with Riz International. I am joined by the man himself, Riz. How are you doing this evening?
Doing well, sir. Thank you for having me.
Oh, of course. It's always a pleasure. And I couldn't imagine a better night to have Riz on because, man, the market has been going absolutely nuts. I mean, it has been nothing but up for the most part for the last, 2.5 weeks. The market will not be stopped, but there does seem to be a bit of hesitation on Friday. We had a bit of an increase in volume here, as you can see, but we did have a lot of indecision. We pushed up to a new all-time high, which is 4,718 and 50 cents on the S&P 500, but we kind of pulled back from that. If you're into candlestick patterns, that's a doji, pin bar, whatever you prefer to call it, shows a lot of indecision. There was a big fight between the buyers and sellers. Riz, what do you make of this? Because, man, it just seems like the S&P 500 doesn't want to quit.
Yeah, you nailed the key points here, where all-time highs and the indecision on Friday just via the candle. But yeah, to your point, that breakout from the 45 area, the 45.50 area in the index, as you have it outlined there, was a big breakout for all the technical enthusiasts and technical analyst type people. And you know what? The market continues to chug along. I feel that even with yesterday late night, I alerted it as well on Twitter and social media that the House has passed the 1.2 trillion total infrastructure bill, but out of that, I believe 550 is what's able to be earmarked and used for the near term. But that obviously is a very positive thing for markets. So even though we're sitting here thinking, oh my God, like this thing is, a rip your face off type of rally is what we call it, or a melt up, if you want to call it that too. These are these common terms, and that's exactly what can be personified as this rally, which is a far cry from what people were thinking was going to happen back in the start of the month of October, right? And wow, it shows you how fast the sentiment and the direction of this market in this day and age changes. Back in the day, you'd be very hard pressed to find this kind of extremes from one month to the other. But here we are. The October month would look very much a different bag of worms, especially compared to September. And now that we're just done the first week of November, we're well into the final Q4 of 2021. I can't believe it. And here we are with the S&P 500 all-time highs. And as Chris has the RSI up, also in very much overbought territory. So when we are in a kind of a area like this, where the technicals say that it's overbought, sure, it can continue. But I always lean towards the cautious approach, where we want to sure have exposure. It doesn't mean you just completely sell everything and get out. We want to have some exposure to markets, but also be very agile in the sense that take positions off that are profitable. Don't if you've got trades that are very deep in the red and there's no future catalyst, and that's with the backdrop of a very strong market, you have to think to yourself, well, if ABC stock isn't going up when the market's been on a tear, what kind of potential does the stock have? So I always say, look at it from a manner of your risk reward versus your exposure to markets, and to remain agile. There's nothing wrong with building a little bit more cash during these times. Sure, if markets continue, you're going to wish you had less on the sidelines, but that's a okay decision to make, because what if we do see an opportunity in broader markets to buy any pullbacks, and if they occur, right? In fact, I've been saying for quite some time that the best hedge is not gold or the VIX or anything. It's really cash. So for this most simplistic and in my view the best hedge is cash, and I hope people are able to utilize that cash position for themselves, and managing their portfolio is a very big thing as opposed to just looking for setups and looking at the S&P 500. It actually comes down to how you manage the trade, how you manage your account as a whole, right? So continuing on with that, I feel like we want to be a little bit more cautious. And of course, with yesterday's headline of the infrastructure bill passing, I think the market may continue to have some legs, that it may continue to go up. But we've seen it before that sometimes even positive catalyst, positive news doesn't guarantee that the market is just going to, continue to be green. There could very well be a situation where market thinks that, okay, you know what, we had this catalyst that everyone was pretty much expecting. I don't think there was too much doubt that at some point, in some shape or form, the infrastructure bill would come to pass. And now that that catalyst has been fulfilled, we now have to look to the future, and that future is the Q4 2021 earnings, which will then come out at the start of the year in January, mid to end January, right? So that's the next kind of key scenario that we want to look at. But right now, so far, markets are running. I'm pretty comfortable, although I am very, very, I would say, proactive in taking profits. And elite members know that, sometimes I may take profits a bit too soon. And yeah, it's not an ideal scenario, but it definitely is better than the worst scenario, which is losing money on a position, especially a position that was profitable. So those are my 2 cents, if you will.
You know what they say, no one ever lost money by taking profits. And you touched on the second question I was going to ask, if you thought that whether, perhaps the infrastructure bill might be viewed as, even though it's great that it passed, if people might be worried about things like inflation, or if you thought that maybe the passing of the bill was already baked in to this market rally. All right, let's go ahead and touch base and take a look and see what sectors are really benefiting from this run right now. And looks like tech is the big push here over the last couple of weeks. Tech has really been making a move, and I'm going to guess that that's mostly focused around positive earnings releases, but we'll have Riz touch on that in a minute. Energy is kind of holding up here. We'll take a look at oil in a minute, but energy, the sector itself is up over 40%. Real estate also kind of just consolidating at a paltry 35% up on the year. Financials also just kind of hanging on right around 29%. But yeah, tech has moved up from, about 23% to 27%. So a 4% gain here over the last couple of weeks, mirroring the market here, the S&P 500. Healthcare and utilities still underperforming the S&P 500, but up on the year. And, still looking green. Market very, very strong right now, up 22.89% since the start of the year. So, Riz, do you think this pull here in tech is just based on earnings, or is there more to it than that?
Yeah, a lot of it has to do with earnings. We've seen, majority of the S&P 500 now having reported earnings, and of course, the largest constituents in the S&P 500 index are tech and growth companies. And yeah, it's not surprising that we've seen a run, especially with things like Tesla, which is a very big part of the index now, and obviously in a tech company, although it might fall into the automotive sector. But ultimately, we've seen, although Apple and Amazon have kind of lagged over the last week in terms of post earnings, but we've seen other companies, pick up the mantle and really, really push the index higher. So it's definitely a part and parcel with the earnings releases, but also the market realizing that, look, there may be some opportunities here for continuation and growth, and we've seen that highlighted the last 2 weeks in tech, along with the broader index. What's interesting here is, outside of the real estate, you notice that the last 2 weeks for things like financials and energy is the opposite. They've actually kind of flatlined. They've plateaued over the last 2 weeks, whereas tech has been more so on a tear. The broader market's been on a tear, but the healthcare and utilities have, although the utilities have been moving flat, the healthcare did have a good week 2 weeks ago, and then this past week or so, it's kind of just moving the opposite way. So it's very interesting to keep an eye on. to me, it wouldn't be surprising that we see tech obviously outperforming the market, which we wasn't the case in the middle of the year. If you look back in June, in May, tech was very much underperforming. But ever since July and so on, we've seen that kind of scales come back to normal. So yeah, definitely interested to keep an eye on. I for one, I'm more interested in the broader index to see how the S&P 500 moves. But I have a personal view that I think energy might be in for a little bit of pullback, especially with oil having to go from $80, $85 to now settling in the $80 range, which we will touch on. But yeah, interesting times as we head into the holiday season.
Awesome. Thank you for that. And talking about oil itself here, obviously huge run on oil ever since about the end of August. Really massive push towards the upside, capping out here, let's see, at 85.41 per barrel back on the 25th. And then we've started to come back a little bit on oil. And, I'm not going to say that I'm overly surprised after this huge run that we may have a small bit of pullback. But obviously, the price of oil definitely affecting people in multiple ways, whether it be travel, whether on the car or in the airplane. Gold really not doing too much. Looks like it's rallying here over the last couple of days, but still really just channelized. Not too much really to talk about with gold. So then instead, let's talk about oil, Riz. Oil is your bag, for lack of a better term. How high do you think oil is going to go? Do you think we're going to hang out here around 80, or do you think it's going to continue higher?
Yeah, I wouldn't be surprised if we stay in the 80 area. My biggest concern, actually, I don't think $80 oil is actually a good thing for sure. It's good for pure E&P, exploration and production companies in the oil sector. But other than that, I don't think $80 a barrel oil is good for anybody else. And the reasons are many. Oil, gas prices at the pump, and essentially oil is a material, is a commodity that's used for many, many, many things. People forget that. And the higher that is, the higher the cost for the productions of anything, whether it's plastic, whether it's even clothing, right? Has byproducts of oil are used for synthetics that that many clothing companies rely on. So the higher the cost of oil per barrel, the higher the cost to manufacture, and thus that price is then transferred to the end user, the consumer. And that's what we call inflation, where pricing goes up, and now it costs more to buy those Lululemon, leggings, and buying, not only just that, but buying a gallon or a liter of gas at the pump to pretty much everything. So this is a key factor in inflation. High oil prices are a key factor in inflation. And I just don't think the economy can afford to have an $80 a barrel oil, which is why the current U.S. administration has been pretty much trying to, I think unsuccessfully, tighten the screws on OPEC plus, the oil producing countries plus Russia, which, in the case that saying that, look, open up the taps a bit, increase production. They have the capacity, but they're not doing it. OPEC isn't doing it. Why? Because they don't want the price per barrel to be hammered like, it was at the start of the year, and especially middle of last year. All right. So they don't want that, because it's in their benefit to continue to have oil be in the $70, $80 area. These countries that are heavily reliant on production of oil for their revenues. So obviously that isn't good for the U.S. economy. I would say it's not even good for the global economy, but it is good for them. So the current administration, the U.S. administration, has said, open up the taps, but it's not happening. And even if it is happening, and if it does happen, I don't think they're going to want to open up the taps to full blast too quickly. They want to ease on it. And that's why we've seen oil prices go from around 60, 65, which my view still has it as the equilibrium, the proper price. But again, it doesn't really matter. The market doesn't care about my perceived proper price. And here we are at $80 a barrel, right? So I feel if the OPEC can continue to increase production, even if it's gradually, that's better than not increasing production at all. Because we've seen demand as their airline travels continuing to go up, and especially heading into the holiday season, which I think people who wanted to travel earlier that didn't get a chance are now kind of rushing to the gates and rushing through the TSA gates, no pun intended, to do whatever traveling they can, as we head into Christmas and holiday months.
Obviously, a big thing that's been going on this week has been the big summit in Glasgow, with the move towards more green energy and carbon emissions and things like that. You kind of touched on the fact on how much oil is used in the economy in general, not just for gasoline and jet fuel. But how do you see these talks affecting the price of oil, or do you think that it'll affect it at all?
Very hard to say. Honestly, very hard to say. These talks are mostly just talk. This
Fair.
is job owning and just whether it's just to appease or appeal to their constituents or a certain demographic of people. There has to be a plan in place. There has to be a viable plan in place, and I find it's the opposite. The economy, the global economy is using more oil this year than they did last year. And I know last year was a very different year, but that goes to show you that demand is still there. And if everyone's trying to move on to the renewable sense and renewable energy and renewable and in the infrastructures around that, it's just not able to keep up. Even you can use renewables, which is fine, but it's not going to be enough to keep up with the demand. And the only thing that can, I would say, reasonably, fill that demand that the end consumer has for energy is oil. Yeah, other renewables, solar, electricity, these are all fine. These are all important, but they're actually a very small part of the global energy requirement, right? So it's fair and fine and dandy to just think that, okay, let's try and get off oil as fast as we can, which I do get, but is it feasible? Is it realistic? Is it doable even? And I don't think we're there yet. So it's very interesting to see all the pundits and all these people parade around renewables and electricity, which, like I said, isn't wrong. It's not at a point of mainstream mass adoption yet. And I don't think it will be for the next 5-10 years. So these things don't change in a blink. And people underestimate how long it takes to switch off of something that the entire world is so very much attached to, and that is traditional form of energy, which is oil. And that's my opinion, and I stand by that. But if the global elite and the leaders don't really see that, or if it's in their best interest to not see that and push a certain narrative of trying to appease to people and by selling them false hope and false dreams, and then they're going to continue doing that. But the real world is a very different thing to the false reality and the fantasy land that some people want to project. And that is a big gap between demand and supply, which is why we're seeing people's costs inflation high. People's costs are very, very high when oil is $80 compared to $60. Then to some of us, it'd be like it ends up being a few $100s a month, or maybe even $1,000 or $2,000 at the end of the year. To some of us, it may not matter, but to some people, it's a big deal. Between having that money for an extra month of paying for their kids or groceries or mortgage, and the difference between that and it going into their car. So that's what we're talking about here, and it's just a shame that the people that are way up high up in their from their high rises and from their penthouse and from their big mansions or from their private jets and from a position of power in the global elite, they may not see that, and it just sucks. But here we are.
I'm so glad you mentioned the private jets because I mean that's got to be the biggest hypocrisy of it all. But you know, I
It's
have
fucking
to.
it's
You go.
despicable. It's
It is.
despicable. It just fucking boiled my blood. People going to the COP26 or whatever fucking conference, and there's over 200 private jets flying in.
Hmm.
It's fucking ridiculous. You know, everyone talks about cars, you know, being one of the largest emitters, in fact, of carbon emissions when they are, but in the grand scheme of things, they're a tiny speck. You know, everyone's so focused on electric cars, which is fine, but they're so focused on such a small constituent of carbon emissions that they completely overlook all the terrible amount of pollutants, whether it's large cargo ships, whether it's fast fashion. Take a look at how much fast fashion, these clothing that people buy that they use for a few months and then throw away and replace. Take a look at the obscene amounts of energy, oil, and oil byproducts that requires, plus the fact that many of these synthetics that they use to make these clothing materials are not compostable, they're not recyclable.
Yep.
So then it has a double negative net impact. Then you look at all these billionaires and politicians flying in with not only one jet, but multiple jets for security and for provisions and all their amenities. They travel, essentially, they're like mansions in the sky that they travel with an entourage. And what about all that? You know, what about all the people that want to travel and all the time? And there's nothing wrong with traveling, but when are we going to address some of these major, I would say, talking points that I think people just either are willfully ignorant about or it's in their best interest not to talk about?
Well, I'm sure this is going to get us flagged on YouTube when we place this. I suspect that Greta will be on the comments asking, "How dare you?"
Let it,
Uh,
let it,
let
let
it
it. I've
rain down
always
on
said
us.
it, and I've always been, you know, I guess it's a little bit off topic, but I've always said it doesn't matter. I'm going to do everything I can to speak the truth and unbiased in a very clear cut um, and open-minded manner. And if that doesn't conform to or fit with the narrative of of the companies or the platforms that the content is on, then so be it. Obviously, I'm not here to peddle any kind of theories or conspiracy theories or falsehoods or fake news. So everything I say is grounded in reality and fact. But as we know, sometimes that's not enough to make it on a channel or on a platform. So if it means that we get blacklisted or shut down, which has already happened many places where we've been shadow banned and we've essentially been silenced, but so be it. It's the cost of speaking the truth.
Absolutely, couldn't agree more. And so, just one last touch. You mentioned, moving to EVs and things like that. Mark my words, if they want to completely eliminate the internal combustion engines, they need to get nuclear fusion worked out first, because there's no way that renewable energy can charge all those electric cars. I'll just put it out there. We'll let Greta come and do her thing. All right. So let's speak of some other things that perhaps those people flying those flying jets may have used to make some money. That would be cryptocurrency. Just taking a quick look here at Bitcoin, obviously busting through, making a new high here at the end of October on the 20th, has come back and consolidated a little bit. Riz, do you see anything going on in the crypto sector recently? Anything that's kind of caught your eye?
Nope. I think I was on the last time I was on. I said, China can't ban crypto enough, enough
Well,
times
we
for
got
it to
we got
stop
to we got to
rallying,
keep
and here we
reminding
are.
them. We got to
Yeah,
keep
I
reminding the
said,
people that they've banned it, right?
yeah, and I even said, look, it looks very strong, and if it can break past the 50,000, and the fact that it hasn't dropped below 40,000, even after all the banning that they've done, it's a very bullish thing, and here we are. It's been a month, I think, since I last said that, and take a look at the last month, right? So it's a classic time in Morium where not always what we think will happen does happen, and that's classic for crypto, and great for people that are bullish or holding crypto, whether it's BTC or Ethereum or anything else, because frankly, it all moves in tandem. Many people, or especially the technical analysis side of things, will point out that Chris has the Ethereum chart here, which is also a nearly all-time highs. But people will point out with the Bitcoin chart that it looks kind of like a long-term cup and handle
I've
type of
seen
thing,
those pictures too.
right?
Yeah, here we go. Here we go, guys. Here it comes. I'll change the color so you guys can see it better.
Yep.
Let's see what will look beautiful. How about teal? That's
Yeah,
no,
yeah,
that'll do.
and it's a long-term cup and handle formation, and I don't know. Some would say it's even a pennant, Chris. If you can even, look at that bull flag there, right? And a bull flag
Oh
is
yes.
seen
Look,
as a bullish thing, as a bullish continuing formation for people. So there's that too. There's a lot of people that will think that, wait a second, okay, maybe there's a chance to go higher solely based on a certain pattern or a certain formation. I don't personally prescribe to that train of thought, but I know there are plenty, and whether they feel it's valid or not is up to them. But here it is. At least we're pointing it out to you in a very transparent and clear manner. Whether you want to look at it from a cup and handle standpoint or from a pennant or a bullish flag standpoint, here it is, right? So I think crypto at 65,000 is a very, very strong indication of the demand and the I would say the faith that people have in crypto, especially Bitcoin, and for lack of a better word, uh, uh, it is here to stay, and it is what it is, right? So, congratulations to everyone that's kind of been holding since kind of the doldrums in the middle of the year when it was around 29, 30,000, and they're rewarded for their patience.
Fair enough. Yeah, guys, just so you see, it's not just the one big one. Okay, so like here's another one. Here's another cup and handle. You can say like, oh yeah, it's happening there, or oh, it's happening here. Except it's not. It just breaks out. So guys, this is really why we don't, trade these types of patterns or teach them, because you can draw lots of stuff on a chart that's already happened. Technical analysis only takes you so far. All right, let's talk about some securities. We didn't take a lot of stocks this week. The only one we took was Zillow that kind of got absolutely hammered on earnings, absolutely destroyed here. Riz, obviously we're a bit of a knife catch on this one. Seems to be holding above this low here. What's your thoughts on Zillow?
Yeah, so I got in around this area, 66, 67 area, and
66.26.
Yeah, and I said it's more of a speculative position. It's a bit of a knife catch. Might be a little bit early, but hey, it's not a full complete position. It's not a high conviction position per se. So I'm cautiously optimistic as far as what happened with Zillow. Well, they lost nearly 380 to 400 million dollars, and they booked those losses because their iBuying program, where essentially short story, they essentially buy homes and based on their algorithm, and then they resell them. Well, that clearly wasn't working when I think it was like 7,000 homes or something. I'm not really sure, but give or take, it was thousands of homes that they lost money on, and the ultimate price tag was a big fat negative 400 million or so, and that's why they had a tremendous, I would say, failure in their release, and they missed earnings, missed revenue, missed everything, and then they decreased guidance. Plus, they laid off about 25% or fired 25% of their workforce, right? Because of this. So, the positive or the silver lining out of this is that at least they're done with that. That house buying model and the house buying service clearly didn't work. They're now shut that down. They've moved on, and the result is obviously not the same solid company that was the case, in the beginning of the year. But at least it's a company that is still able to continue to operate, continue to provide their existing services, existing listing services, and house comparison and their apps. But also a company that is leaner and has better margins. Okay, they're leaner, they have less workforce, and they have better margins, less overhead. So my hope is that we see a little bit of a bounce, a little bit of a recovery after this massive drop. This chart doesn't fully highlight the bloodbath that occurred from around $100 a share just a day or two before earnings, all the way down to $66. That's a tremendous drop, in a span of 2 to 3 business days. trading days. So that's not even including the fact that it was, already fading lower over the last few months. And if you take a look at the highs around nearly $200 or so per share, that is a big, big haircut for a company to lose 70% of its value, 70% of its market cap in a span of what, Chris? I think that's 7 months.
Yeah, just about.
Unbelievable, right? And obviously, it's a growth stock. It's a growth company. It's a tech company. It's all those catchy words in one. And I'm hoping that they can turn it around for a speculative play. That I'm not inclined to see it have to go back to 100, even if it fills a little bit of the gap to 75, 80 on a very, very positive upside. Sure, I'm good to take it off at that point.
Awesome. Well, great. Thank you for that analysis, Riz. Is there anything that you're keeping an eye on this month?
Yep.
Or not this month, this week?
I'm glad you brought that up. I am. There's actually a whole list I have in front of me, but I'm going to save the main list for our elite members. But I will share for those of you that are not an elite and maybe watching the recording after the fact. I'm going to share a couple names. So one is MU, a company that we've traded before, we've talked about before.
Yes.
This is having a nice. I mean, the downtrend is still there, but it's having a nice recovery, and I like how it's moving. I like how it's right in between the two moving averages that Chris has, which is the 50 and what is that? I think Chris, that's the 90. And
yeah, it's the 50 and the 90.
Yeah, right between there. So it's looking good. It's having a little bit of recovery from the 68 lows or 67 lows area. So that's one. Okay, keep in mind, of course, you want to make sure that the market environment supports this if you want to go long. Another one is MRK. Okay, this is a pharmaceutical, obviously something I've talked about. It rallied on positive news over the last month about their potential COVID pill. A pill that can decrease the side effects of COVID and decrease the hospitalization rates and thus decrease the death rate. And the reason it got absolutely slammed the last trading day was because Pfizer, on the other hand, released news that they have a potential pill in the works themselves, which can decrease the effects and decrease deaths and side effects of COVID. So that's a big, right? No longer do you need to have, again, this is all theoretical, it hasn't been pushed in the market yet, but the fact that it's viable and the fact that it's, in production or in research phase is a big thing. So MRK has some stiff competition from Pfizer, so it's dropped. It's still an amazing company. It still has a whole host and a whole product line of different drugs and medications that it offers. So it's not just solely dependent on COVID related drugs. So I feel that if it gets to the 80, 78 level, I think it's a great buy. But I think this is something you want to keep an eye on. Another COVID related drug manufacturer that I want to touch on is mRNA. Right, Moderna. This one's really, really big, obviously, in terms of anything and everything to do with COVID. It's been the poster child, per se, of the last year and a half for development and everything to do with mRNA technology, and as it translates to a COVID vaccine, but also potentially other applications. And you can see that in the middle of the summer and beginning of summer, in fact, how this rally in this stock went ahead. But the reality now is, after this most recent earnings, they, I believe, decreased guidance. In fact, the earnings were a miss. They didn't do too well, and that does not bode well for investors' confidence in a company that is saying that potentially they could make less money. Right? They could start making less money, or they could start selling less, and maybe this whole COVID thing is not going as well as they planned. So it's something to keep an eye on. I'm not here in a position yet for a knife catch. I think these two big gaps down, like from 350 all the way to 236, is a big drop in 2 days. Right? In 2 days, Chris is down all the way to 223 to 236 now. So that's a big drop, right? If you go all the way down to the bottom wick, about 40% haircut in 2 trading days. Wow. So this might be a good entry point for people that are very, very bullish on mRNA technologies, and which I think is here to stay. I think that's a big, big thing for other applications and other drug manufacturing. So that's another one. Last one I'm going to point out is another company that got hammered, but interestingly so. This one is LSPD, Lightspeed Commerce. This is similar to, think of it like, I'm not going to go in the weeds of it, but ultimately provides e-commerce and on-commerce type of solutions, right? Think Shopify with a mix of Square. Okay, I think hopefully that's a prudent example. But this thing dropped. I think it was like a 20% drop. I think on earnings, Chris. After, even though they, according to TradingView, they beat earnings, I think at 30%, give or take. I mean, I wouldn't go all the way down to the wick, but to close, I feel like it's an overreaction. I think what happened was I think their guidance wasn't as strong. So although they beat earnings, and I don't know if they beat revs, but their guidance wasn't as strong. And okay, look, they beat both handily. So this is a nice overreaction. I think this is a good entry now. I don't have a position yet, but I'm thinking of taking one on Monday after it looks like it's found a floor around the 70 area, and now it's 73 after Friday's green close. All right. So those are the great high quality trade ideas I have for you guys. Something to consider. I hope it's valuable. Again, I think this is high quality content, high quality insights without the fluff, without the nonsense that we continue to provide here, not only to our elite members, but hopefully those of you that are watching this afterwards.
And guys, if you're watching on YouTube, make sure you like and subscribe, all right? We could use that. We'd really appreciate it. All right, we got some questions here from our elite members. How do you guys feel about Meta, aka the Zuckerverse, and that presentation that the Zuck gave us? Let's take a look at Facebook. What are your thoughts on it, Riz?
That presentation was interesting. Obviously, a lot of very, very future type of visionary type of stuff, and I don't think majority of it is even close to being in the hands of consumers or viable. But it's definitely interesting, and we've seen that the market kind of really liked that. Whether it's viable or not, they just like that. This catalyst did occur, and it's proved to be a good thing for the stock price, whether it's coincidental or it was going to happen regardless after it got beat down. We don't know, but I feel like it's good. It's a good thing. We had a position in Facebook. We made money on it. And currently I do not have a position, but overall, I think it's obviously they'll never admit it. Facebook, Mark Zuckerberg will never admit it, but I think it's just, it's more of a PR type of thing. And it's just beneficial for them to kind of separate Facebook from their other brands, kind of like how Google did with Alphabet, right? Alphabet being the parent company and then owning their different brands, whether it's Google or YouTube and so on and so forth.
Absolutely. I can't imagine that Zuckerberg would do something just for a press release. That just not like him at all. All right. Aman wants to know about PayPal. Asking, are we going to hold through earnings? It says we hit the 225 support level here a couple times, and he's absolutely correct on that. But man, after that news break about the potential for buying pins, man, talk about a sell-off here on PayPal. Riz, what are your thoughts?
Yeah, it's you're right. The 225 support is there. I have a position. I've had a position for I think over a week or so, and in fact, I have also added more to it. So I believe I've added to the position twice now, which isn't too common for me, but it goes to show you PayPal is one of my high conviction plays. And yes, as we head into earnings this week, it will be very important. And for me, I'm carrying through. If I had profits on this and a sizable or comfortable profit on this position, then I might have been inclined to take it off. But full transparency, I am not in profit. I am in the red, but nothing major. But I'm okay here. I'm okay here carrying. And, I've already averaged in So I don't see myself averaging any further, but I do see myself carrying this through earnings, which hopefully, as we know, no one really knows what's going to happen. It's a coin toss, but we are, at least I am carrying through that catalyst.
There you go. All right, Milton has a question. He wants to take a look at Lyft. He's got a long question here, so I will read it as we take a peek at the chart. All right, he says, recently broke a short-term downtrend. He's thinking a possible profit, one position at 56.50. Well, you definitely could make it there, which has shown to be a resistance point. My concern is, how would you guys define a stop loss position here? The clearest floor to me is 44. Ideally, I'd prefer a better risk versus reward ratio.
Great question. A very specific one with a lot of details. But in this case, it all comes down to I'm assuming you haven't entered the position, you're not in the position, so you're asking from a point of, is it worth entering with these key levels, 44 and 56.50? And you're right. I think the risk reward from a pure profit target to stop loss standpoint isn't ideal, right? We don't even need to bring up the percentages there, but from a technical standpoint and from a business standpoint, yes, they had good earnings. They beat earnings. The stock has recovered. Now it's just all about if that momentum can continue, right? And it looks to have been doing that. Now the question is, can it continue to do that after breaking above the 200-day moving average and the 56.50 area? That's the key point. And then where technical analysis folk will say that's a breakout at that point. So I feel like this may be a bit of a momentum type of trade. You want to, continue. If you get in, you always set like a hard stop or a trailing stop on it. And if you're in profit, otherwise you have like a core area. And I think if you get in at 53, let's just say 53 and a half, I think $50 area would be your stop if you wanted to have a good risk reward. And then you maybe move that profit target to, 57, 58, and if it can hit it, right? So that would be my ideal. I know 44 long-term support is the better stop loss area, but for entering at this point, you need to have a more strict stop loss, a more closer stop loss, especially on a momentum trade like this, which I think is what it is at this point. If you had gotten in, beginning of the week, then it would be a different story.
Yeah, it kind of looks like the start of the breakout has already happened, and getting that close to the 200 simple moving average is definitely, it's a little dicey. You'll see a lot of buying and selling there. It's just the question of who wins. Do the buyers win or do the sellers win? And that is the big question that everybody wants to know before getting in a position. And sadly, if anybody tells you they know, then you might as well just turn the video off because they're lying. I see we got some other people talking. Oh, okay, here we got to beat this dead horse a little more. Are we going to dump Wish? I think at this point the answer is no.
After earnings, we'll see. We don't know. I'm carrying through earnings. It would be stupid not to. It makes most sense to carry it. See if how that turnaround is going after horrible earnings last quarter and horrible guidance last quarter. So let's see how that goes. I am carrying. But I do intend to bag. Let's just cut this whole. Just the moment I see that it's made a nice run, or the moment I feel like any upward momentum fizzles out. If the earnings are bad and this thing refuses to go up, then I will cut it and just move the fuck on, take the loss.
There you go. Sometimes you just gotta let her go. Yas says, can we take a look at American Airlines? Well, since you asked so nicely, absolutely we can. American Airlines looks like it's hitting some resistance here right around this 22 area, but definitely breaking out over the 200 simple moving average. What do you think on this one, Riz?
Yeah, all the airlines ran for the most part last week on positive data, which was essentially hiding the fact that there's more traveling is strong. It's continuing, in fact, stronger than anticipated, which is why these airline stocks have boomed. Personally, I'm not too sold on getting in now or seeing it. There's way better opportunities than this personally. Okay, that's just me. There's better risk reward. There's better probabilities in my view, because you can see that currently the stock is getting a little bit overbought as well after the rally of the last week. So personally, if someone does get in, it would need to be a breakout / momentum type of trade. They would need to be aware of the setup and where their profit target is, and then also, I would say in this kind of case, have a defined stop in place. Usually, I don't like having stops in place for large companies and large conviction positions, but when you chase a trade or when you place a trade like a setup like this, you need to have some kind of protection in place.
All right, Matthew wants us to take a look at ATUS. Take a look. Ooh, wow. Okay, ATUS got hammered.
Yeah, this is a unique one. Completely destroyed, finding kind of a base here, and earnings are positive. I don't know the company. In fact, I think the ticker symbol seems kind of familiar. I must have seen it, but I'm not aware too much of the company, the tech, the fundamentals on it. So from a pure technical standpoint, yeah, this looks good for more of a continuation or type of entry. I don't think it was too bad. Hopefully, after earnings, it can continue this run. But yeah, this looks pretty solid from a technical standpoint. I can't speak to it from a fundamental standpoint.
Yeah, I have to agree. Definitely breaking out of the channel here. The question is, will it carry that momentum back towards the upside? But earnings were good. Revenue looks good. I have to look at guidance. I don't know it off the top of my head, but financials don't look too bad. And I think this will be a good one to end because we've been going at this for almost 50 minutes now. Anthony says, can we take a look at the Zon, the Amazon? All right, Amazon making a move here. It says it looks like it has more upside from here. Well, there's definitely room. Riz, what do you think? You've taken somewhat of a sizable position in Amazon.
Yeah, I have a position currently probably worth around $355,000, $360,000 right now. It's in the green. This is looking good. It's coming around my initial target of 3,600. I said it from the get-go that 3,600 would be a level that I'd be willing to get out. My cost is around 3,340 or so. But I think this has upside, especially above the 3,550 if it can hold it. We see that wick breach above the 3,550, but it couldn't hold that. So I'd be curious to see how it does this week. It does have upside. Maybe it goes past 3,600, blows through that, and 3,700 in the next coming weeks. Who knows? But keep an eye on it. Very, very strong momentum. Obviously, a great company. Earnings and future guidance wasn't the greatest, but it goes to show you how you can have weak guidance, but still be a phenomenal company. And, you can see a breakout, a bullish run momentum like this, a few days after, which is what we're seeing. So this has been a high conviction play. This is something that I've been carrying for a few months now after last earnings drop. So it will be very nice to be rewarded with that conviction above 3,600 area.
Awesome. Well, I want to thank all of our elite members for coming out. And I want to ask Riz one more question here before we go. Now, obviously, we have kind of a potential inflection point in the market here based on this last candle on Friday. I know, Riz, you're a man with a plan. So give us a brief synopsis. If we see more, selling coming, we see a retracement back maybe towards former support level or something like that. Or if we see a breakout and the market continues to run, what is your plan for either scenario?
Yeah, the positions I have, the core positions that I have, I've mentioned a couple, and the elite members know what I hold. Like, whether it's Amazon, whether it's PayPal, whether it's Zillow, and Activision, and so on and so forth. I'm not going to list them all. I would be further validated to carrying them if the markets run. But on the flip side, if we see a pullback, which I don't see as being high probability just yet. You know, a little bit of a fade is normal, but a pullback, meaning, you know, 2, 3, 5%, I don't really see that currently at the time of this recording. But if we do see that, then I would be looking to get rid of the weaker position. So like the first thing that I would cut, if that were the case, would be Zillow, because I'm assuming if markets drop, maybe Zillow loses some of its luster even further and starts puking even lower because the markets as a whole are dropping. So I would cut weak companies like that first, but the strong ones that I believe in and have faith in, and assuming Amazon or something like, you know, PayPal goes lower, I would continue to hold those kinds of companies, especially the large caps, you know, especially if they're profitable companies. I would continue to hold those. So, and then of course, if there is a pullback, you know, 2, 3% or more in the index, that might even open up some opportunities for entries. So having that cash component is another key, right? If it does end up pulling back, that cash component will very much come in handy. If markets continue to run, well, okay, you know, you're going to wish you had more in the market, but that's okay. You know, it's cash is the best hedge. It's best to have that dry powder. And it's not like you don't have long positions. It's not like you don't have positions open to take advantage of a continuation in the rally. So I like to be looked after on both sides of the equation, whether markets go up or down.
Awesome. Thank you for that final insight. For all the people who waited till the end of the video to watch it, I really appreciate it. Guys, thank you for coming out. To all of our elite members who are here live, thank you for all of your amazing questions and being part of this fantastic community. And if you're not part of elite, guys, you got to jump on this. Next year when we open up membership again, if we do, it's time. If you are ready to take your trading to the next level, this is where it is at, because we are taking all the trades that we post. None of this taking it in a simulator garbage like that, guys. We are playing with real money just like you, and we are hurting when we're hurting, and we're winning when you're winning. So guys, if you want to be part of a community that's real, that's authentic, that's legit, Riz Elite is the place to be. So guys, have an absolutely wonderful rest of your weekend. And Riz, thank you so much for coming out and giving us all of your insights this evening.
Awesome. Thank you.